Hi there, welcome to Kneppy Invest and welcome to May 16, 2024. We have about an hour left of trading, 51 minutes in normal trading, and then the 10-minute closing auction. And hopefully your portfolio is up big today. All the indices are up over 1% because the CPI numbers in America were to expectations. I'll talk about that when we look at a few tweets. And then we'll have a look at the top 5 announcements of the day after we go through what the ASX has done today, and also have a look at the best performing and worst performing companies. And the top 5 announcements were pretty easy to come up with because 3 companies released their results today. In fact, one of the biggest companies on the ASX released their results, and that company last time it was up 10%. And the company that came in number 5th, I was sort of umming and ahhing between that and another company. So maybe I'll even talk about that other company. And then at the end of the video, maybe we'll have a look at chart. Maybe we'll have a look at Gamestop's chart. I noticed the share price of that company fell a lot, and I don't understand why anyone would even be thinking about buying shares in that company because it's pure speculation, and it's just running on a few tweets from Roaring KT. Okay, so before we have a look at the ASX today, and yes, I'm still timing this particular video, but before we have a look at the ASX today, let's have a look at the CPI numbers overnight. So yesterday, I said that, or brought you these 2 tweets from Market and Mayhem. In fact, I'll just zoom in a little bit and I'll talk about what the April CPI month-on-month reading might be, the probability of it, and how the market would react. So we wanted the April CPI numbers to be below about 0.35%. Now, this particular forecast from Goldman Sachs was around core April CPI numbers. Not sure what JP Morgan, I think maybe that was just normal CPI numbers. So let's have a look at the CPI numbers. And the most important number here is below 0.35, preferably below 0.3, because if it is below 0.3, the American markets would have had a great day. And that's exactly what happened. So let's have a look at the results. So core inflation in the April CPI was 0.29%. It says here basically in line with economists' expectations, but that's good because in previous months, CPI has been coming in higher or hotter than expectations. So that's core inflation. And just below that, they got the headline inflation, which was 0.31%. So that's around the number we wanted to see. So 0.29 for core and headline CPI 0.31. That's why the American markets were up big. That's why we're up big. And it's just weird that how we can react so significantly to CPI numbers in America that were to expectations. But that's how we're rolling right now. Now let's have a look at the ASX today, and everyone's been jumping up with enjoy on what's been happening. The market's up big. So let's have a look at the indices and sectors, and we'll have a look at the ASX 20 just to see if any companies are down today. But gold up 2.42%, all tech up 2.1%. Banks have had a good day. Everything's had a good day except energy. Energy is down. So more than likely, maybe uranium's down, oil's down, but every other sector is up above 1%. Real estate up 4%. And that shouldn't be a shock because the real estate sector is highly sensitive to interest rates. And with CPI numbers not hotter than expected, that means the chance of interest rate rises in the future are probably much lower. So let's have a look at the ASX 20 to see if any company in this particular index is down. I would be shocked. 2 are down. Probably something to do with real estate. No, something to do with energy. So I'm thinking Santos, maybe Woodside. So let's have a look. There we go. Santos and Woodside. Of course, they're both in energy, both down 0.3%. So if there is an investor out there who put all their money into energy, they're probably kicking themselves right now. And the best performing company is giving away the company that's coming number 1 in the top announcements of the day. Aristocrat up over 11.7% on their half-year results. Not a surprise. The results were good. I'm just surprised how the market has treated Aristocrat over the past few months. And we'll look at that company later in the video. Goodman Group up big, understandably. It's a quasi, I'm going to call it a quasi-REIT. It's not really a REIT in my eyes. It's a quasi one because they are way more than just a REIT. And banks have done well. Macquarie Group's done well. And to be fair with you, every single company has done well except energy. Now let's have a look at the best performing and worst performing companies. We'll start with the top gainers just in case I've missed anything. I don't think I have. A company called Iltani Resources is up 69%. I'll just have a quick look to see if that company did release anything interesting today. I'm assuming maybe just some sort of nothing, just running on who knows sentiment. Who knows what's happening? Maybe it's another meme stock. I just don't know. Sun Silver, the IPO from yesterday, up another 35%. So that's interesting in itself. But other than that, just a few companies that I know are running hot in this list, but nothing that really is piquing my interest. And if we look at or by filter it by market cap or rank it by market cap, Aristocrat, one of the biggest companies on the ASX, up 11.97%. Vulcan Energy, for those who don't know, I've mentioned a few times in the past week or so, I'm trading that company right now, up another 6.5%. I am close to taking profits in that. That's up over 20% since I bought in a week. And sometimes I'm willing and able, definitely able, to take profits when a share price has run up 20% in 1 week. Aries Resources, that's weird. That's up a lot. But one of my copper companies is down. Hillgrove is down. Duratec has turned around a little bit. OneView, I noticed a few emails in regards to OneView, some sort of, I don't know what you call it, investment house, whatever you want to call it, was hyping that company up. I followed that company over the last 5 years, and it has never interested me, even looking at it. And Camplify has not had a nice rebound after a fairly dire day yesterday. So anyway, no big surprises on this particular list. Let's have a look at the top losers. And there could be some companies coming out of the woodworks here. No, nothing in the percentage changes. Presto Holdings, never heard of this company. Consumer Defensive. Let's just have a look at Pental. Old Pental. Yes, I do know what this company is. They changed their name. They used to be called Pental. Now they're called Presto. I doubt this company released anything. Mentioned a return of capital, cancelled dividend distribution. Maybe this has something to do with them going ex-dividend. So what was the ticker? PTL? Have they gone ex-dividend or something today? 16th of May. Nope. No idea why the share price is down. That's okay. I have zero interest in that company. And otherwise, nothing on here that makes me go, I do know this company, AML 3D, did a capital raising. I did see that one. But let's list this by market cap. Latin Resources, Strike Energy. I wonder why Latin Resources is down. So that's lithium. Here, there's Hillgrove. So Aries Resources, one of the best performing companies, copper. Hillgrove Resources, copper, one of the worst performing companies. What's going on there? I'm not surprised Integrated Research is there. I might, if the share price is around these levels tomorrow, I might add to my trading position in that company. So down 5.7%, but I think that's just profit taking. Share prices run up over the past few days. So never surprised to see that sort of movement in a company that has increased in value by over 100%. Anyway, that's no big surprises in these lists. Silk Logistics, I want to have a look at this company maybe because the share price or the chart of Silk Logistics has been in a funk for a long time. And I'm just thinking maybe there is some value in this company. So not really trading the chart. So the chart looks awful, but is there any value in this company? So the market cap of the company is about $120 million. Company is profitable. I'm assuming they're profitable. So last financial year, they had profit of 16.4 million, 13.4 million previous year to that, 8.4 million. So profits have been increasing, revenue's been increasing. And so at these levels, the P ratio should be fairly low. It says 8.7 and dividend yield is 4%. So it could be a value trap. And you can just see the chart is an ugly chart. So possible value play for Silk. And I just noticed the share price is right on the previous lows. So possible interesting trade for Silk Logistics. I'm just going to write down the two codes so I don't forget. Anyway, so let's get into the top announcements of the day. I was umming and ahhing about the company coming in number 5. I had two choices here. A company called Peninsula Energy. I think it's called Peninsula Energy. Let's have a look. Peninsula Energy, yep. And the other one was Namoi Cotton, NAM. Now, you'll probably notice Peninsula Energy share price has not moved at all. In fact, there's been no trading. There is a reason behind that. And Namoi share price probably has decreased a little bit. So let's have a brief discussion of both of these. I'll say Peninsula is the honorable mention. So Peninsula Energy have been doing a lot of capital raisings. In fact, if you go back through their announcements without looking at what's happened today and look at the last 1 year, they did a fairly big capital raising back in November, raising, I think it was like 60 million or something dollars. They did another capital raising in January. Here it is, $10 million SPP closes, substantially oversubscribed. And they're doing another capital raising, a $106 million equity raising. Now, this is supposed to get them to production, but the shares on issue in this company have absolutely exploded over the past year. And the reason I say that, because I've done quite a few capital raisings, what I did is I went to FinChat and I just put in Peninsula Energy. So this is uranium, by the way. They have a project in Wyoming. I did read somewhere it has the potential to be the biggest uranium mine in the United States, whether that's just hyping up the project. But what I did is I just went to the shares outstanding down the bottom here. So if you look at the shares outstanding, so back in 2020, it was 280 million, went up to 900 million in 2021, up to 1.3 million last year. Now it's up to 1.3 billion. Now it's up to 3.5 billion. Your shares in issue have almost tripled in the past 5 months. So shares on issue, I think about 3 billion, and then they've got options about 500 million something. So 3.5 billion shares on issue, which means they're raising at 10 cents, which means this company will have a market after this capital raising of about 350 million. And when I first had a look at this company at a similar share price over a year ago, the market cap was below 100 million. That's what happens when you raise capital. Share price could move nowhere, yet the market cap of the company could significantly increase. And that's what's happened to Peninsula. Do I have any interest in this company? Probably not. Probably not. Although, if this is the last capital raising, and that's a big if, because I wouldn't have that much faith in management. If this is the last capital raising from the company, I might be interested, but the chart tells me no, don't take a position in this company just yet. And you compare this particular chart of this uranium company to any other uranium company, Boss Energy, and I have no position in any of these companies, so I'm not at all biased or anything. Which one would you choose? That one or Peninsula? Or what about Berkeley? Is it Berkeley? Berkeley Energia? Well, that's pretty bad as well. Bannerman. What about Bannerman? We'll also have a look at Bannerman. Oh, that's a beautiful chart. Lotus. I think it's Lotus. Lotus Resources. I'm pretty sure this is uranium. That's a beautiful chart. Deep yellow. Beautiful chart. And what's another one? I'm missing one. Deep yellow. In fact, I do have a uranium watch list all the way down the bottom here. Paladin. How could I forget Paladin? Oh, jeez. I'm pretty sure this company is going to production. So which would you choose? Paladin, this one, or Peninsula, which is right at the top here? Which one has a better chart? Now, possibly the market has been waiting for this last capital raising, so maybe now is the time to think about buying Peninsula, particularly if they do get into production. But I'm just concerned about this rush of capital raisings that are done over the past 5 months. Okay, so that's the honourable mention. Coming in at number 5, we have Namoi. So Namoi has been under a takeover bid for a little bit of time. In fact, the takeover bid has been increasing. From, I forget who it is from, but you can see it here or in their announcements. Quite a few takeover offers, intention to make takeover bid, LDC takeover offer, blah, blah, blah. And then I just noticed ASX Louis Dreyfus acquisition of Namoi raises concerns. I actually did read this, and it's really interesting reading. So the ACCC, or ACCC, whatever you want to call it, Competition and Consumers Commission, has a problem with its acquisition because of north of Western Australia and Northern Territory, with the possible lack of competition now. So stemming from the emergence of two new cotton gins in Katherine, Northern Territory, and Kununurra, West Australia. And with this particular possible acquisition, there won't be any competition, which is not good. Not good. If the acquisition proceeds, LDC will be involved in operating the only two cotton gins in the north of Australia and Northern Territory. We are concerned it will result in LDC being able to reduce competition between these two cotton gins, which may result in higher prices or reduced service levels for ginning services. ACCC Commissioner Stephen Ridgway said. So there should be concerns about this particular takeover bid. So let's have a look at the chart. And this is another reason why I sell whenever a company I'm owning gets a takeover bid. Not always. Sometimes I don't. Sometimes I hold on a little bit longer, but I usually do sell. And you can just see the takeover bids. It's actually started in November last year. And there's been a few increase in takeover bids for this company. The first one would have been maybe around 50 cents. And now share price is up to 71 cents. Share price has fallen a little bit on today's news, but that's understandable because now we're concerned the takeover bid is not going to go through. Other than that, is there any reason to be holding this company? Let's look at the weekly chart. Share price really doing nothing over the past 10 years, slowly creeping higher. But other than that, the only reason I've known this company existed was because of this these takeover bids. Sorry, Namoi, maybe I should have known you before November last year. Coming in number 4, we have one of the 3 companies that did release the results, and that's Graincorp. Share price up 3.1%, so you might think the underlying numbers were pretty good. Now, they did title one of their announcements, they delivered resilient first half results. So whenever you see the word resilient, you know that underlying numbers are going to be pretty bad. Now, when I say bad, I don't mean negative for the share price, but I mean in terms of decreasing. So underlying EBITDA from 383 million to 164 million. Profit from 200 million to 50 million, so decreasing 75% there. Underlying profit from 200 million to 57 million. Core cash, whatever that is, from 340, is that cash on hand? It just should say it here. Core cash to debt refers to net debt less commodity inventory. Okay. And first half dividend, flat. So they delivered a resilient result as grain and oilseed markets normalized following 3 extraordinary years for the industry. Now, I have a feeling these results were to be expected. I'm pretty sure they actually mentioned that. These were expected results. So the market had already priced this in, or did they? Did the market really price these results in? Because when you have a look at the chart, the share price hasn't really suffered all that much over the past few years. So really, did the market price these results in? I don't believe that at all. Share price has been as low as about $6.50, but yeah, we haven't seen a significant decrease. This is the weekly chart, by the way. If you have a look at the daily chart, yeah, in fact, if you do have a look at the daily chart, you could just see sort of an uptrend trying to develop. But there is a bit of volatility in this company's share price and a nice little floor in the share price at about $6.70. However, the share price right now, $8.20. And fair bit of volatility today. I've just noticed the one-day candlestick. Share price has been as high as $8.60. Now it's $8.25. But not massive volatility. And so this is 1 minute. Yeah, so there was a lot of interest in this company on open. Share price went to $8.60, and there's been steady selling ever since 11:30 a.m. So do I like these results? Not really. Do I like the company? Not really. It's an ag company. I don't really care about these sort of companies. They're just short-term trades. I don't care what people think about what's going to happen with the climate. Climate can trick us in many ways, and we've seen that in the past 6 months. We thought we're going to have significant drought because of El Nino. Didn't really happen all that bad. Looks like we're going to La Nina, which means more rainfall, possibly with enhanced sea surface temperatures in the Coral Sea and elsewhere. Perhaps those enhanced rainfall will be significant rainfall, and flooding won't be that useful for these companies. Maybe flooding will be really bad for some ag companies. I don't know. It's a very hard sector. So that's coming in number 4. We have Graincorp. Coming in number 3, Media. So they have the AGM. Share price down 3%. AGM, but they also released a trading update. So if they just had an AGM, that's it. I wouldn't care about this company. Or I shouldn't say that. That's probably mean. I wouldn't care about what they released today. But a lot of times when a company does have the AGM, they will issue a trading update. That's why I love November as well, because many companies have their AGMs October into November, and a lot of companies release trading updates at that point in the year. Now we're in May. So on the flip side, a lot of other companies that have their full year results, or that have a similar financial year, or their financial year is the same as a calendar year, they're having their AGMs now, Media. And many of these companies will be issuing trading updates. So obviously the market doesn't like it, down 3%. I am a little bit surprised by that, but I do see the high of the day was $1.69, which was higher than the close yesterday. So at some point in the day, the market liked these results or this trading update. And when I actually did have a read it, which was right at the end of the presentation, here it is, trading update. Just zoom in a little bit. I didn't read anything here to be too concerned. So they're still talking about growth, mid to high single digit revenue growth, and it seemed positive. It didn't seem negative. It seemed, if anything, positive. So most things to expectations, okay growth, so nothing to be concerned with. And even though the share price is now down 3%, at one point today, the share price was up. So let's have a look at the chart for Media. So I haven't really looked at this company much in the past. Well, I do look at this company a little bit, but okay, on open, the share price did. So on open, there was a little bit of interest in this company. So share price opened at the high, and there was almost immediate selling. So maybe I was just like a retail investor thinking these results were, or this trading update was good, buying on open, and then seeing the share price drop almost immediately. And that's probably an argument to why you shouldn't buy on open, even though sometimes I do. Sometimes it's not the best thing. Sometimes you can read the market wrong. But let's have a look at the daily chart and the weekly chart. Is this an opportunity to get excited? Not really. Weekly chart. If you look at the weekly chart, share price has really done nothing in the last 3 years. In fact, the share price is significantly lower than it was pre-COVID-19. Did this company do a capital raising? More than likely did a capital raising sometime in 2020 because they're advertising, outdoor advertising, and they would have seen a significant drop in their revenue. Let's have a look at their revenue history. Yeah, there was a significant drop in 2020. It went from 650 million down to 426 million, and they did have a loss of that year. In fact, they had a loss in 2020 and 2021, and revenue has recovered, but not all the way back up to 2019 level. So possible cover raising. So even though the share price is down significantly from the highs back in 2018-19, possibly the markup is almost identical. In fact, we can have a look. Let's have a look. I'm doing a little bit more than what I wanted to here. So Media, there it is at the top, and we can just have a look at the shares on issue. Come on, FinChat. It's not that hard. There we go. And yeah, it looks like they have done a few big capital raisings, and a big capital raising in 2020. In fact, shares almost doubled from 2019. So even though the share price is down significantly from 2019, shares have doubled, which means the markup is probably the same, almost identical. In fact, you can see that just by looking at FinChat. And yeah, in fact, we want to go back to 2019. Yeah, the markup is almost identical to 2019. So share price lower, significantly lower, but markup is about the same. Okay, so that's Media. Coming in at number 3. Coming in number 2, we have Incitec Pivot. This company does, I'm pretty sure, fertilizers and explosives. I suppose fertilizers, explosives are the same sort of thing, roughly. And they released the half-year results. And based off the market reaction, these results were pretty good. Now, the underlying update on fertilizers business divestment process. Did not know that. That just shows you I don't really look at this company all that much. Now, their media release, 31 pages. That's a really big media release. Seems a bit excessive for media release, but that was the anyway. So just like Graincorp, the underlying numbers here were pretty weak, so significantly down from 2023. But again, I think the market expected these sort of results. So the most important thing about this is how did the market react? I had no expectations for this company at all, zero expectations, but the market thought these results were better than expected. The possibility of a market update in this could have also helped drive the share price higher. So haven't really gone through the results all that much to see if there was, but that could have helped the share price if they had a positive trading update within these results. So let's have a look at the chart for Incitec pivot. Is this a breakout? The whole reason I go through this process is I'm looking for a breakout. Well, the weekly chart looks weak. Not really. In fact, just by looking at the weekly chart, you can see straight away this is not a company you own for the long term. This is not a wealth creator. In fact, the share price is almost at the same levels it was back in 2014. And the daily chart is this. This is a potential breakout. I am telling you right now, this is a potential breakout. So the share price is at about a 6-month high. Last time share price was this high was back in November. So we're talking about a 6-month high. Some good volume coming in. Definitely one to follow. This could be a breakout. Incitec pivot. All right, so exciting. We have a potential breakout on our hands. And this is the whole reason I go through this process and look at these companies when I see the share price rise 6% on a good volume, a potential breakout. All right, coming in at number one, we already know it's going to be Aristocrat. They released their results. Numbers were good. I'm not even going to show you the results. There's the media release, 5 pages, compared to Incitec Pivot, which was 31 pages. The results were good. What can I say? Now, I'm going to say something maybe controversial there. So everything's up. Everything's up. You can't complain. Now, again, it's also based off comparing these two expectations. Now, let's have a look at the chart for Aristocrat. This is where it becomes interesting. I think the market expected some bad results from Aristocrat. Share price was in a downtrend. Share price back in March was up to $47. It fell from $47 to $39. In fact, at $39, and there was a nice little support level at these levels, so that would have been a good time to take a position if you were wanting to hold this company. I'm not going to talk about ESG issues. I don't care about that. I don't care whether you do have an ESG filter, but if you do have an ESG filter, make sure you never ever buy lotteries, because then you're sort of like a hypocrite. And also make sure you go to your local member and say, we need more financial education in the world, because financial education will stop people gambling. That's all you need, in my opinion, although it's an addiction, some people say. But if we do improve financial education in Australia, I will almost guarantee you lotteries will see much less cash, and casinos will see much less people going into them, because once you increase the financial literacy, people realize that more than likely they will lose money, not make money. Anyway, so Aristocrat, pretty good day, and I think the market may have got this wrong. In the lead up to these results, the share price was in trouble, under a bit of stress. So definitely the market got this one wrong. In fact, the P/E ratio of Aristocrat before these results was below 20. I think it was like 18. And the P/E ratio of Woolworths was about 20, 25. The P/E ratio of Commonwealth Bank was above 20. What would you have preferred to buy? Just disregarding ESG. A company that is growing at a fairly good rate, Aristocrat, at a P/E ratio below Woolworths and CBA. It's a no-brainer for me. I will much rather buy Aristocrat. In fact, saying that, pretty sure Alphabet, the company Alphabet, Google, had a lower P/E ratio than maybe Woolworths recently. And I was just shouting at a podcast when they were saying Woolworths is a buy because the share price has fallen. Alphabet, compare it to Alphabet. Oh, wow. Anyway, that's Aristocrat. And let's have a look at Gamestop. One chart, I'll show you one chart, and that's it, because I want to keep this under 30 minutes. So Gamestop, I don't understand why anyone would buying this company. So, this is insane. So yesterday, share price did increase. Well, it didn't increase, it fell. Now, it increased 60% yesterday, but during the day it fell a lot, and today it's fallen about 20%. But if you just have a look at the 1-minute chart, it's just insane. So there was buying, a lot of volatility. Look at that volatility. Share price today went as low as $31, back up to $39. A few days ago, share price opened at about 64. So some people lost half their money just by trading this. I don't understand why anyone would be in GameStop right now because one person issued 2 tweets. Anyway, that's all I have for this video. And don't forget, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.